In this video, I'm going to cover the best brokers for futures options in an IRA, also futures options in general. I'm going to break down everything you need to know about futures and futures options and span margin and how it can help you maximize your trading potential inside an IRA. So what is an IRA? So I'm going to go over that, understanding the basics and how it works for traders. What type of margin is used to trade futures? Hint, it's called span margin. And what is span margin? A simple explanation of this powerful margin system. How span margin can increase your profits. Learn how it offers more efficient capital use compared to traditional margin. And the best brokers for span margin in an IRA and also in regular accounts, and which platforms support it and why it matters. And by the end of this, you'll know exactly how to take advantage of trading options and futures inside an IRA and use span margin to optimize your IRA trading strategy. So what is an IRA? It's an individual retirement account. It's a tax advantage investment account designed to help individuals save for retirement. A lot of times if you have a 401k and you leave the company where you had a 401k and then you roll it over, you're no longer in a 401k, now your money is in an IRA. Or if you want to just open up an IRA, you can do that and you get some tax advantages to doing that as a retirement account. The key benefits of an IRA: tax advantages, investment flexibility. What's good? You can invest in stocks, bonds, ETFs, mutual funds, options, and futures options, which is what I'm talking about today. It has compounding growth. It helps money grow significantly over time. And retirement security. It helps individuals build wealth for retirements tax-free. And then when you retire, then you're going to pay the taxes. Unless it's a Roth, then you pay the taxes up front. So what is span margin? Span margin is a standard portfolio analysis of risk. Its margin is based on a margin system developed by the CME group, which is over in Chicago, the options group over there. And they determine the margin requirements for futures and options on futures. Okay, so it has span margin is a specific margin specifically for futures and futures options. How it works. It uses a sophisticated risk model that assesses how a trader's portfolio would perform under different market conditions, considering factors like price changes, volatility swings in your portfolio, time decay, and portfolio position correlations in your portfolio. Span calculates margin requirements based on the worst case loss scenario within a set of predefined market conditions. Let's talk about leverage and margin. So there's three different types of margin, and used properly, margin is one of the most valuable tools in a trader's arsenal. It can be actually used to decrease risk in a portfolio if you do it right. There's three kinds. There's Reg T margin, and there's span margin, and there's portfolio margin. Reg T margin is kind of the regular margin that everybody typically has. You get leverage of 2 to 1. You have $5,000 in your account, but you can buy $10,000 worth of stock. That's regular margin or Reg T margin. Now, span margin and portfolio margin, they act very similar. They look at the total portfolio to decide how much margin is required. And one of the major differences, they're very similar, but one of the major differences is span margin is specifically for futures and futures options, and portfolio margin is not for futures or futures options. It's for pretty much everything else. Now with span margin, it's pretty easy to acquire. You fill out an application, most of the time you get approved. With portfolio margin, it's a little harder. You got to jump through some hoops. Sometimes you have to take a test and pass it. You have to show that you have a certain amount of knowledge in options trading, and also you have to have an account worth more than $100,000 just to qualify for a portfolio margin. With span margin, I'll get into how much money you need to have in the account later on in this video. So why I use span margin? I use it for early management, high return optimization. And I also use it for profit stacking. So there's two reasons why I use span margin. I use portfolio margin for the same reason, but this video is specifically about span margin because we're talking about futures and futures options. So early management, high return optimization. With regular margin, if you look at a risk graph with an options portfolio or an options position, what you'll see is the expiration line. And when you see that, that is how you're going to be margined with regular Reg T margin. You're going to be margined based on the expiration line. With span margin, they don't look at the expiration line. One of the things that you can look at is the T+0 line. So your margin requirement, you can leverage up quite a bit more because it doesn't use the total worst case scenario. It uses kind of a realistic scenario. And so when trading with span or portfolio margin, you need less buying power to enter into a trade compared to Reg T. And for the same level of risk, you can achieve higher returns on your investment if you manage your trade before expiration. And here's an example. So in a regular account, to make $1,000, you might have a $1,000 profit target on a position, and it might take up $21,500 just to bring in that 1,000. You're getting about 4.65% return. If you're using portfolio or span margin, to get that same $1,000 profit, you might only use $2,800 in capital requirements, or the amount of money being tied up in the account. And so that's a 35% return. So if you manage early instead of waiting till expiration with some of your option strategies, you can take advantage of leverage. Is it risky? Well, trading and investing can be risky if you don't have an all-encompassing plan that accounts for worst-case scenarios, right? And many people are unaware that by effectively utilizing span margin, it's possible to manage strategies that are significantly more efficient than those achievable with only using Reg T margin. In fact, there are specific types of trades that are entirely unfeasible with Reg T margin, but can be successfully executed using portfolio or span margin. Now, another reason why, the second reason number 2 is why you use span margin, is for profit stacking. So what is profit stacking? If you have span margin, you can effectively use your buying power to double dip. It also works with portfolio margin, by the way. You can trade an efficient option structure, right, an options portfolio, on top of another type of portfolio, maybe going long assets like bonds or long stocks. So there's two types of portfolios going on, and you can kind of double dip into those. So for example, if you have $100,000 in startup capital, I could buy $100,000 worth of treasury bonds yielding 4% and still have $99,000 to trade options. That's having $100,000 in the account and trading with $200,000 or $199,000. The term I use to describe this double dipping is profit stacking. So I'm going to give an example here. So here's an options portfolio with bonds. So for example, you put $100,000 into the account and you can buy $100,000 worth of bonds, and then you can take $99,000 and trade options portfolio. So you're actually trading with $199,000 with only $100,000 that you put in the account. You're not really at risk because you're holding bonds. Bonds are not very risky at all. You can also do an options portfolio with stocks. So you have $100,000 and you put $100,000 into stocks, then you have somewhere between $50,000 and $85,000 to trade options with. So you're basically double dipping. You don't get quite as much capital to trade with as bonds. Bonds are a lot safer than owning stocks, so you get less, maybe $50,000 to $85,000, but you're still double dipping. Now next I'm going to get into the details of the best brokers for trading futures and futures options and using span margin in a regular account and using it in an IRA, and also which platforms support it and why it matters. Here you can see that I have the different brokers broken down. I've talked about Schwab, Interactive Brokers, Tasty Trade, E-Trade, Fidelity, Tradier, and TradeStation. So that's 7 brokers. And I went ahead and contacted all the brokers and I asked, can I trade futures? And yes with Schwab, yes with IB. Interactive Brokers, yes with Tasty Trade, yes with E-Trade. Fidelity, you can't trade futures or futures options. Tradier, yes, and TradeStation, yes. So Fidelity's kind of kicked out of they're done, right? You can't trade. It doesn't matter whether you can do it in an IRA or not. You cannot trade futures or futures options with Fidelity. Can you trade options on futures? And the answer is yes with all of them except for Fidelity. You can trade options. So as long as you can trade futures, you can also trade options on futures in all of these brokers. and also is span margin available. Of course, you can't trade futures or futures options without span margin, without that special margin. So again, you just fill out an application. It's pretty easy to get approved, and you have this certain type of margin called span margin, and you have the right to trade futures and options on futures. And it's pretty good. It's really good leverage, much better than regular margin. The next question I had was, how do they calculate the span margin? Do they have a proprietary, or do they just use the CME's guidelines? Well, with Schwab, they have a proprietary way of doing it. With Interactive Brokers, they have a proprietary way. With Tasty Trade, they just use the CME. With E-Trade, it's very interesting. They didn't know. Like, I talked to the guy who was in charge of it, and he did not know. They did not tell him. So E-Trade doesn't tell them if they're using CME guidelines or whether they're using their own proprietary guidelines to figure out what the margin requirement is. It's more than likely going to be very close to what the CME guidelines are. In fact, these proprietary ones are very close to what the CME guidelines are. In fact, they might just be the CME guidelines, and maybe they're just saying they're proprietary. But anyways, okay, so Tradier is CME, and TradeStation, they say, yeah, we use CME guidelines. And these guys probably do too, but they say that they're proprietary. I don't know. They said they're proprietary, so they probably are. But they're really close to CME guidelines. So let's talk about next the futures account minimum. So what does it take to open up an account, a regular account, not an IRA, a regular account, and you want to trade futures? So with Schwab, you got to have $1,500 to open it. Interactive Brokers, $2,000. Tasty Trade, they don't have a minimum to open the account. E-Trade, $1,000. Tradier, $2,000. And TradeStation, it takes $5,000 to open an account to trade futures or futures options. Now, we haven't gotten to the IRA yet. I'm just talking about rather regular accounts. And with this, TradeStation, right away, they bump up the CME requirements by 2 times. So when you get margined, let's say you get margined, let's say that you put on a trade, it takes $10,000 worth of margin, according to the CME. Well, with TradeStation, you're going to have to be margined $20,000, where these other guys are going to just margin you $10,000. So they double up the margin right away in a regular account. Okay, we're not even in an IRA account yet, where they kind of increase the margin, just in regular account with TradeStation. All right, next question. Can you trade futures and futures options in an IRA? With Schwab, yes. Interactive Brokers, yes. Tasty Trade, yes. E-Trade, you cannot trade futures or futures options in an IRA. Fidelity, they don't even have futures options. And then Tradier, yes. And TradeStation, yes, you can. Now, when you open up an IRA account and you want to trade futures or futures options and you want to get span margin, you have to have a minimum of $25,000 with Schwab. And their requirements are 125%. In other words, if you're trading a regular account in futures options in span margin, a position that takes $10,000, well, in an IRA, it's going to take $12,500 in margin to do that with Schwab, which is pretty good. With Interactive Brokers, you need $2,000 to open an IRA account to trade options and futures options, but they margin you at twice the amount of normal. So in IRA, they increase the requirements. They force you to not leverage up as much. So it's twice as much. So it's twice as bad. So if you had a normal position where you didn't have an IRA, you put on a trade, it takes $10,000 in margin. In an IRA with Interactive Brokers, it's going to take $20,000 in margin, twice as much. Tasty Trade, they require $25,000 to open up an IRA where you're going to trade futures, and they double the margin compared to the CME. And of course, E-Trade and Fidelity, you can't even trade those. And then interesting here, Tradier, it only takes $2,000 to open an IRA, and they say that it's zero, that they don't increase the margin requirements when you trade in futures in an IRA. They don't increase the margin requirement. And then TradeStation, it's the same as a regular account. It takes $5,000 to open the account, and they double the margin. This is interesting right here. This zero right here in the Tradier. I called them twice just to verify that. And also they said you have to open up an account with this company called Equity Trust, which costs $350 a year. And I talked to Equity Trust briefly about futures and futures options, and they don't know anything about futures. So you need to talk to Tradier about this and verify this. One thing that's interesting, the guy at Schwab told me that there's a minimum of 125%, where they increase margin by 25% basically. And that is a mandate done by Congress or the IRS. That's what he said. But then, according to that, Tradier is not following that. They're not increasing their margin on an IRA. So I don't know who's telling me, one guy says it's law and the other guy says we don't have to do it and we don't do it at all. So it's just interesting. And these are the results that I got. So I would definitely check into Tradier if you want to trade futures or options on an IRA and see if they don't increase the margin requirements or they just use the CME requirements. That's a pretty good deal. Now, I don't have an account with Tradier, so I haven't verified that myself, but this is the number, this is the information I got. Also, in this column here, when I trade a custom order, okay? I don't trade traditional, like a traditional butterfly or a traditional spread or anything like that. I trade custom orders, so I want to know if I can trade custom orders on the platform. With Schwab and Thinkorswim, yes. With Interactive Brokers, yes. With Tasty Trade, yes. They didn't used to. They recently implemented that. E-Trade, no. And of course, Fidelity doesn't matter. And Tradier, yes. And TradeStation, yes. So you can trade with those brokers, those 5 brokers, with a custom order. And that's important to me. Now, a couple things I want to say here. If you use span or portfolio margin, you need to check with your particular country. I'm in the United States, so this is based on the United States. If you live in a different country, all of this could be totally different and not apply. So you need to check within your country what the rules are. Also, check with your broker before making any trading decisions, right? And do your own research. Because this is research also done as of February of 2025, and something could change if you're watching this video at a later date. If you're interested in how I've used early management high return optimization and profit stacking to be able to trade for a living since 2019, see the link in the description. This video covered span margin, why I like to use it, why it's important, and also what are some of the requirements that the brokers require when using span margin in a regular account, and also using span margin in futures and trade futures and futures options in an IRA.